What are you expecting from the oil prices? Where can prices head?
I think we are probably at the top end of the range, really, because you do get a lot of shale suppliers in the US. They can ramp up production and supply fairly quickly. That would cap a real big upside from there. But nevertheless, I think oil would still be traded based on world demand. And of course, the positive thing, at least the support, is that you're going to get probably a strong Q2 rebound in global demand.
James, this is Emily here joining the conversation. Now, as we talk about the spike in oil prices, what about some of the oil majors that are traded in the Asian region? We know that India as well as China, the biggest customers of Iranian oil. How would this be impacting stocks?
Well, I think generally oil is just one factor when we look at Asian stocks. Really, it is many positive things that have gone in place. One, it's central banks in Asia are turning more, at least keeping policy on hold or perhaps thinking of even cutting rates. And of course, you have the cyclical rebound that I talked about earlier on. But more importantly, it's this central bank pivot towards a more dovish stance. And I think that would actually be very positive for Asian stocks going into the next few weeks and months ahead.
Would you be able to shed any light on the weakness that we're seeing in the Chinese markets? Just yesterday, it was the worst performance in about 4 weeks. But the Chinese markets hold basically the title of being the best performing market this year in the world.
Yes, I think you have to take a step back. You're right. If you look at year to date, the Chinese market had done very well this year. But of course, last year, Chinese market suffered a big hit. So day to day, it's hard to make predictions on day-to-day market moves. But nevertheless, I think we are bullish on China, really, because the Chinese government they are easing not just monetary policy, but we've seen even in the fiscal policy side of things, they have reduced taxes in a very big way, more than 2% of GDP. And I think we are starting to see signs that filtering into the economic data. You have high-frequency data, such as lending data, debt issuance data in China starting to improve, and that impact on economic growth in China is starting to pick up, especially in the weeks and months ahead. And I think, therefore, investors should still stay invested in China. And not forgetting that you're going to have the inclusion program, whether it's in major equity indices or bond indices, there's going to be much more flows into Chinese assets in the months ahead.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.